Today, April 1st, 2025, draws significant attention to the cryptocurrency market as the U.S. Senate Banking Committee has scheduled a confirmation vote for President Trump's SEC chair nominee, Paul Atkins, set for Thursday, April 3rd at 10 a.m., following an extensive hearing last week that showcased his pro-crypto stance. If confirmed, Atkins could usher in a transformative shift at the SEC, moving away from its current enforcement-heavy approach toward digital assets, a change that might alleviate years of regulatory pressure and foster a more supportive environment for cryptocurrencies like XRP and Bitcoin. Meanwhile, XRP has faced persistent selling pressure, tumbling 19.9%. Since Ripple CEO Brad Garlinghouse announced the SEC's intent to withdraw its appeal in the Ripple case. Though the agency's continued silence on an official statement keeps market sentiment subdued and uncertain, Bitcoin, on the other hand, has stabilized at $82,512 on March 30th, snapping a recent losing streak, thanks to MicroStrategy's latest purchase of 22,048 BTC for $1.92 billion, a move that countered significant outflows from U.S. Bitcoin spot ETFs and bolstered demand. These contrasting dynamics, XRP's struggle and Bitcoin's resilience, highlight the critical role of upcoming regulatory decisions and macroeconomic factors, such as Trump's tariff policies, in shaping the short-term outlook for these leading cryptocurrencies. The SEC's lack of an official statement following Garlinghouse's announcement has fueled uncertainty, with XRP dropping 2.24% on March 31st to close at $2.0898, underperforming a broader crypto market that saw a modest 0.09% increase, pushing the total market cap to $2.63 trillion. This silence could stem from multiple scenarios, including the possibility that the SEC is strategically awaiting Paul Atkins's confirmation to align its next moves with a potentially more lenient regulatory philosophy under his leadership. Alternatively, the agency might be finalizing settlement terms tied to Judge Torres's final judgment, or redirecting its focus to other high-priority crypto enforcement cases, leaving XRP vulnerable to intensified selling pressure until clarity emerges. Despite this, market optimism surrounding the potential withdrawal of the SEC's appeal against the programmatic sales of XRP ruling has provided some support, though the absence of formal confirmation continues to hinder XRP's recovery and ETF prospects. Paul Atkins's confirmation vote on April 3rd could prove to be a defining moment for the U.S. digital asset landscape, particularly if his pro-crypto perspective prompts the SEC to formally abandon its Ripple appeal, potentially unlocking the path for XRP spot ETFs and broader institutional adoption. Senate Republicans on the Banking Committee, encouraged by last week's hearing, see his leadership as the final piece in overhauling an SEC that has leaned heavily on litigation under outgoing Chair Gary Gensler, often to the detriment of crypto innovation. XRP's near-term trajectory depends on several pivotal factors, including SEC vs. Ripple court filings that could finalize the appeal's withdrawal and lift lingering injunctions, offering a clearer path forward for investor confidence. Broader macroeconomic pressures, such as escalating trade tensions from Trump's tariffs or deepening U.S. recession fears, might drive XRP down to $1.7938, while a reduction in risk aversion could propel it toward its all-time high of $3.5505, especially with ETF momentum. XRP's daily chart currently exhibits bearish near-term signals, with technical indicators suggesting further downside risks if the SEC's silence drags on, or if macroeconomic conditions deteriorate, amplifying the impact of tariff-related concerns on risk assets. However, the approval of an XRP spot ETF, coupled with robust institutional demand, could catalyze a significant rally toward $3.5505. though delays in regulatory resolution might keep XRP's gains capped in the immediate future. The SEC's ongoing reticence since Garlinghouse's announcement has left investors speculating, with some theorizing that the agency is deliberately waiting for Atkins' confirmation to synchronize its Ripple decision with a new regulatory direction, potentially ending a contentious chapter for XRP. Others suggest the SEC might be finalizing settlement details or prioritizing other crypto cases, a delay that risks escalating selling pressure on XRP unless an official statement or court filing provides resolution soon. Bitcoin, in contrast, ended Q1 2025 on a stronger note, rising 0.13% on March 30th to close at 82,512, partially reversing a 0.36% loss from Sunday, driven by MicroStrategy's latest acquisition, announced by Chairman Michael Saylor, who detailed the purchase of 22,048 Bitcoin at roughly $86,969 per coin. This $1.92 billion investment, boosting MicroStrategy's holdings to 528,185 Bitcoin acquired for $35.63 billion since its aggressive buying began, countered substantial outflows from U.S. Bitcoin spot ETFs, achieving an 11% BTC yield year-to-date in 2025. Despite this bullish support, Bitcoin's gains remained constrained amid expectations of additional tariff announcements from the Trump administration, which have heightened inflation fears and economic uncertainty affecting risk assets broadly. MicroStrategy's dip-buying strategy reflects a strong belief in Bitcoin's long-term value, though it faces headwinds from macroeconomic factors that could test its resilience further. U.S. Bitcoin spot ETF outflows persisted for a second day on March 31st, totaling $75.7 million, excluding BlackRock's iShares Bitcoin Trust, driven by mounting concerns over Trump's tariff policies and their potential to exacerbate inflation and slow economic growth. Specific funds reported significant withdrawals, with WisdomTree Bitcoin Fund losing $32.6 million, ARK 21 shares, Bitcoin ETF shedding $23.2 million, and Bitwise Bitcoin ETF seeing $19.9 million exit, following $93.2 million in outflows on March 28th. This cooling institutional demand contrasts sharply with MicroStrategy's aggressive accumulation, underscoring a split in market sentiment as tariff-related uncertainties dampen confidence in risk assets like Bitcoin. Continued outflows could pressure Bitcoin's price, though dip buyers like MicroStrategy may stabilize it, preventing a steeper decline in the near term. Bitcoin's price outlook remains contingent on multiple scenarios, with a bearish case emerging if heightened geopolitical risks, opposition to the Bitcoin Act, or persistent ETF outflows push it toward the $70,000 support level amid ongoing tariff and inflation pressures. Conversely, a bullish scenario could materialize with robust macroeconomic data, easing trade tensions, bipartisan support for the Bitcoin Act, and renewed ETF inflows propelling Bitcoin toward its prior peak of 109,312, bolstered by institutional buying. The daily chart for Bitcoin also displays bearish near-term signals, suggesting caution as market gains are limited by tariff uncertainties and the absence of immediate catalysts to break past recent resistance levels. MicroStrategy's $1.92 billion purchase offers a glimmer of optimism, though broader market trends will hinge on regulatory clarity and economic developments in the weeks ahead. Several macroeconomic and regulatory themes will continue to shape the crypto market's direction, starting with the outcome of the SEC versus Ripple case, where a formal appeal withdrawal could ignite a rally in XRP and enhance ETF prospects, potentially lifting it beyond current levels. U.S. trade policy developments, particularly Trump's tariff initiatives, will influence inflation expectations and risk asset performance, while legislative progress on the Bitcoin Act could alter Bitcoin's supply-demand dynamics if it gains bipartisan traction. U.S. labor market data, critical for shaping Federal Reserve rate expectations, will impact investor sentiment alongside BTC spot ETF flow trends, which remain a key barometer for Bitcoin's institutional adoption and price stability. While recent SEC decisions might reduce near-term uncertainty, a transparent and consistent regulatory framework under Paul Atkins could be essential for fostering long-term investor confidence across the crypto space. XRP's potential ETF approval, tied to Franklin Templeton's filing and Atkins' confirmation, could drive prices toward $5 to $7 by late 2025 if institutional inflows materialize. Though its current bearish signals and 2.0898 price reflect the market's wait-and-see stance. Bitcoin's resilience at $82,512, supported by MicroStrategy, contrasts with ETF outflows, setting the stage for a volatile yet opportunity-rich market as regulatory and economic factors converge. Please like and subscribe for more updates.